So I hope each one is going to pick a thing. I hope each one of you picked something from that last call. And I hope you're going to act on it, right? So, but it's fine if you don't want to act on it, no problem. It's a thing of choice. It's a choice. It's a choice. So let's talk about key levels, right? So when we talk about key levels, right? When we talk about key levels, please help us tag everybody to make sure that they're on the call, right? Just help us tag them. So when we talk about key levels, right? Let's start, right, so that we don't waste so much time. So when we talk about key levels are like specific areas, right? And majorly key levels refers to they refer to closing prices. Key levels are key levels refers to closing prices, right? And there are three major types of key levels, right? We have the A-shaped key level, right? We have the A-shaped key level. We also have the V-shaped key level, right? We have the A shape, we have the V shape, then we also have the open close key level, right? The open close key level. The open close key level just talks about where two consecutive candles just overlaps, right? Where we have two consecutive candles that actually overlap, right? So that is why we call it open close. So when we have two consecutive sell candles, right? The moment we have two consecutive sell candles, we can see that the open and the closing price of those two candles are actually overlapping, right? So you see that this is also like a key level that we want to see, price, either sell from or buy from, right? So we have the A-shaped key level, right? These are like key levels. They are closing prices on specific areas or specific pricing areas that we want to see price actually buy, either sell from, right? Or also buy from, depending on the market condition at that time. Also, we have the V-shaped key level, right? The V-shaped key level is also a specific pricing level or a closing price, right? Majorly a specific pricing level that we want to see price buy from or sell from, right? Depending on the market condition, right? So what that means is that every time we have, when I said we can use a key level, we can use the A-shaped key level for either sales, right? Because we want to see price tap into it at that specific pricing level. We want to see price tap into that particular key level and continue to drop, right? And normally A-shaped key level should be used for selling opportunities, right? But because of depending on the peculiarity of the market, right, we can see that many a times that price can actually disrespect that particular key level, right, with an impulsive move to the upside, right? Like I said, pay attention to the use of my words, right? The impulsive move to the upside that disrespects this particular key level and closes above it as a body, right? Price might come back to that same level again, that specific pricing level, use it again, and price will continue to buy to the upside, right? So it depends on the peculiarity of the market. Same thing applies to a V-shaped key level. V-shaped key levels normally should be used every time we want to see price buy, from a specific pricing level, right? Anytime we want to see price buy from a specific pricing level, we use the V-shaped key level. But depending on the peculiarity of the market, there are also times that price can actually disrespect this V-shaped key level like this, close below it with an impulsive move to the downside as a body, then price will come back again to still use that same V-shaped key level and continue to sell to the downside. So automatically we're supposed to use it to buy, but we broke below it. Now we are using it to sell, right? So when we have two consecutive down candles, right, and our open close are actually overlapping, one of the things we actually need to know is that uh, this type of open close, when you have like two consecutive down candles, right, they can actually be used for selling opportunities, right? You can use it to sell like this. You target the next key level, right? But because the same thing as I'm saying, as I just said, right? Depending on the peculiarity of the market, price can actually break off from a particular open close key level. Use that same key level, and price will continue to move to the upside, right? Depending on whatever happens, right? So you will see that there are many times that for this open close key level, right, you will see that there are many times that price can actually be bearish, right? For only for price to do something like this, you will see like what we call like an engulfing. Price is going to engulf this open close. It's more like price saying that, when price engulfs two consecutive down candles that give to us an open close key level, the moment we have this engulfing, it's just like we saying that um yeah, it's just like saying price broke it's just like saying price broke below a V-shaped key level or an A-shaped key level, right? It's almost the same thing as saying that price broke below this V-shaped key level and closed below it as a body. It's also the same thing as saying that price broke above this A-shaped key level and also closed above it as a body. So what that means is that because of what has happened here, our price closed above this A-shaped key level, there is every possibility, right, that price would actually do something like this, come back to the same key level that was disrespected and continue to move to the upside, right? And the same thing here, right, on the V-shaped key level as it was disrespected and closed above it, below it as a body. There's every possibility that price will tap here, that same key level and continue to move to the downside. So one of the things you now begin to understand is that sometimes the market can be bearish, right? The other thing can be bearish, only for price to give to you two consecutive down candles that gives to you an open close key level that overlaps. Then you would now notice that the key level, you will see that price would actually engulf something. It doesn't have to engulf these two consecutive down candles. Sometimes it will just have to engulf just one, right? After engulfing just one key level, right? After engulfing just one, this open close key level, after it engulfs this particular candle, it means that price has broken above the open close key level. So there is every possibility that sometimes we can pay attention to the we can pay attention to the V-shaped key level that is being created here, right? You know, V-shaped key levels are created by the closing prices. So now there are two major levels we might want to see price run from. All right. So the first place is that we might want to see price come back to this V-shaped key level here, which is the extreme. And many a times you'll find out that price can actually just tap from this particular open close key level that was broken. So what we are trying to say is that price can break above an open close key level with an engulfing, and then price can also do something like this, create an internal range liquidity or inducement liquidity, and price will continue to move to the upside. So instead of seeing price come down like this, right? Many a times you see this on the 4 hours, right? The 4 hours is just going to engulf a particular candle breaking above the open close key level. When you move to a 1 hour time frame, but before you move to the 1 hour time frame, you will see that that 4 hours time frame that engulfed the open close key level, if you put like this particular two on that open close key level that got engulfed, if you move to the 1 hour time frame, you'll see that many a times price will run off from that open close key level that got broken, right? Price will just, the next candle that will trade close to it will trade lower, tap into that open close and continue to move to the upside. Meanwhile, there are a number of people that are waiting here, right? There are a number of people that are waiting here only for price to do something like this, create an internal range liquidity, take it out, play out from that same key level on that got the open close key level that price broke above, and price will just continue to move to the upside. So key levels are specific pricing areas, right? They are specific pricing levels, right? And one of the things you need to also understand is that for you to be able to mark out your key levels properly, right, you need to understand that key levels are marked out on closing prices. They are marked out on closing prices. And one unique thing you need to also understand, right, on key levels is that key levels can be used for entries. They can also be used for exit points, right? Which means that if we have, for example, if we have this particular A-shaped key level that is resting here, right? Now let's say the order flow of price is actually to the downside, and price has created this A-shaped key level, and the other flow is to the downside. Now we see that on the 4 hours, price has engulfed this particular candle. We had an engulfing, and also we broke above an open close key level that was created here, right? The moment we get an entry here, this let's say at this open close key level that got broken, right? We would see that the next place we can actually ideally target, right? If not like a proper liquidity point, right? The next place we can actually ideally target is going to be the nearest key level that was actually created, right? Because there's every tendency that price is actually going to run from one particular key level to another. Price will bounce again from another key level, come again to another key level like that, right? So what I'm trying to say is that for when it comes to the subject of key levels, right? Price moves from one point of key levels. You can use it as an entry, and you can also use it as an exit, right? And the unique thing about key levels is that you can use it to build bias, right? In fact, that is what I used to build bias. I want to see, I mean, if you've gone through that video we did randomly on higher time frame bias that night, and we had a call from 12 to 2 o'clock in the middle of the night, right? You will see where we used only key levels, just purely key levels. You will notice that we're not marking out, we're not picking out one full order block. No, we're not picking out one full order block. We're picking specific areas that price is going to react from. And we have just two conditions that we want to see price do. So the two conditions is that after price taps into a particular key level for building bias, the first condition is I want to see price close, either above or below it, right? And to confirm the direction is that we're going to move one time frame lower, right? So if this is on the daily, we're going to move one time frame lower to say the 4 hours, right? From the 4 hours, we want to see price do what? Sweep liquidity or break structure, or we want to see price give to us like an engulfing that is showing that, okay, yeah, we want to even move even lower or higher, right? So we have certain conditions. So it's as simple as that, right? So it just takes a little bit of patience to be able to wait for all of these things to happen. So back to what I was saying, that key levels can be used as entries. Key levels can also be used as exit points as well. So as much as you want to, somebody who is this, is it breaking? Okay, can people confirm? He said it is breaking. Is it breaking from any other person's hand? Please confirm if it is breaking from any other person's hand. Okay, it's from his end. Okay, good. So that is one of those things you need to understand about key levels, right? This is one thing you need to understand about key levels. So we know that if we move, uh, okay, so we know that a key level, we have three types of key levels, right? The A shape, the V shape, the open close, right? And depending on the peculiarity of the market, A shapes are supposed to be used for sells, V shapes are supposed to be used for buys, and open close cannot either be used for buys or sells, depending on the peculiarity of the market. An A shape is which is supposed to be used for sells, can be used for buys when price closes above it, it breaks above it and closes above it as a body. And a V shape can be used for sells, which is supposed to be used for buys when price closes below it or breaks below that particular key level and closes below it as a key level. So now that we know that these are the types of key levels that we have, we also need to understand how how price moves, right? Like I always say, like there's a logic behind how we want to approach price. So the logic behind how we want to approach price is that if you have a V-shaped key level, for example, so let's say you have a V-shaped key level like this, for example, right? We know that we're all going to be looking for selling and buying opportunities from this particular V-shaped key level, right? So we are all looking for buying opportunities from here. So one of the things we need now begin to understand is that, okay, thank you. So one of the things you now begin to understand is that as much as you want to see price give to us a buying opportunity from this particular key level, the moment you see price disrespects your key level, this is where flexibility comes in. If price disrespects a particular key level and closes below it as a body, right, just know that the condition of that market has actually changed. We're going to be moving from a buying condition to a selling condition. So but there's always a logic behind it. And one of the logic we attach to it is that we always want to see price create for us what we call an inducement liquidity or internal range liquidity, which means that we want to see price create liquidity very close to this particular key level that got disrespected, right? And price just taps into it again and continue to move to the downside. So the logic behind it is that two things. Number one, that V-shaped key level that got disrespected, we want to see it many a times. We want to see it get disrespected with an impulsive move to the downside, right? And we also want to see this particular V-shaped key level overlapping with an imbalance, right? The moment it begins to overlap with an imbalance, it makes it high probability for us, right? So how does it make it high probability? We know that the market wants to do two things, right? The first thing that we want to see the market do is attack liquidity. The second thing we want to see price do is after liquidity has been attacked, we want to see price rebalance and hold imbalance, right? So it tells us about the two major market conditions that we want to see price do: sweep liquidity and rebalance and hold imbalance. So one of the things you want to always see is that anytime you have a key level that price got disrespected with an impulsive move to the downside, right, and it closes below it as a body, right, just mark out that particular key level and extend it out to the outside, right? The next thing you want to do is that you want to also ensure that many a times, right, now this is like a disclaimer, right? That there are times that even after price has disrespected a particular key level, one of the things that price can actually do is just go straight, tap into it. Price might not even create an internal range liquidity. The next candle will just come tap into it and it will just be a mighty fall, right? So, but there are also times that But what makes it high probability? Because we want to be able to repeat the same process over and over and over and over again, right? We want to be able to pick one particular logic to the marketplace and become masterful at it. So one of the things we always want to see is that after a V-shaped key level has been actually disrespected, price close below it as a body with that impulsive move, we always want to see that there's always going to be an internal range liquidity created close to that V-shaped key level. And also it becomes high probability trade when the V-shaped key level is overlapping with an imbalance. So the moment you see your V-shaped key level overlapping with an imbalance, it satisfies two major conditions for us to know that number one, the first condition of the market is to sweep liquidity. The second condition of the market is to rebalance old imbalance, right? Price wants to rebalance old imbalance, also sweep liquidity. So the moment you have something like this, you will see that this internal range liquidity that has been created is going to get swept, then this imbalance is going to be rebalanced at this specific pricing level, right? At this specific pricing level, at this specific pricing level. And also, you must train your eyes to be able to see it, that there are times that you have a V-shaped key level and A-shaped key level. Price would have even tested it once, right? What I mean is price would have tested that key level once, respected it only for price to disrespect it, right? So this is what I'm trying to say. So you see, this is a particular key level here, right? So price tested it once here. So price tested it once here. We bought only for price to disrespect it again, right? The moment you see price disrespect it and you see that this was like an impulsive move to the downside that led to that disrespect of that particular key level, just know that the next thing we want to see price do is that price is going to create for us an inducement liquidity back to that same key level, and we'll just continue to sell to the downside. Many a times, right, this in such scenarios, like price will just only one candle is enough to just come to tap into that particular key level, right? And price just continues to move to the downside. So we want to have and always apply proper logic to how, how this market works. Do you understand? So we want to always apply proper logic to how this market works. So the same thing applies, in fact, to the open close key level, right? Open close key levels, there are two major consecutive down candles. I can't count how many trades I've taken with, I mean, with this type of stuff. I mean, it's just the same logic. So, for example, we have an open close key level, right? This open close key level is just created by two consecutive down or up candles. So you will see that what price is going to do is that many a times, let's say, for example, these are two sell candles, right? We want to see price continue to move to the downside. What makes it high probability for me is that I just want to see the next candle trade close to this particular open close, but I don't want it to trade. I don't want it to tap into it. So I will see that this open close is going to tap close. It's going to trade close to it like this. It will trade close to it like this, but it's not going to tap into that open close. So it means that now this next candle is going to serve as my what? Internal range liquidity. Then what I want to see is that the next candle must sweep this liquidity that is being created, then price must continue to move to the downside. So you see, whenever I see an order flow, in fact, let me tell you, when I see that price has started an order flow to the downside, and let's say I miss the origin of the move, right? Let's say price has swept liquidity, broken structure, move like this, giving us something like this. So we miss this origin of this move here, where price took out the internal range liquidity, reacted from a key level here. Then we miss the continuation sales where price came back to a key level that was disrespected. The next thing I'm going to be looking out for is that as long as I know that this order flow is to the downside, if I see open close key levels like this, where you have two consecutive down candles, then you have the next candle, right? That has traded close to this particular open close key level, but didn't tap into it. I'm just going to look for selling opportunities from that point, right? I'll just look for selling opportunities from here because number one, I want to see this liquidity taken. Then I want to see price tap into this particular open close, and we'll just continue to do what? Continue to move to the upside. So it helps me to be able to streamline to know, okay, when to join a particular trend and when not to join, right? So if that also means that for this particular type of key level, right, if price closes above it as well, right, this just like I explained to us, let's say price closes above a particular key level like this. Okay, I'll answer when I'm done, right? So when you look at another time, just like we spoke about the V-shaped key levels, right? When you look at the open close key levels, when you have price, engulf a particular open close key levels like this. If you see price engulf like this and it breaks above this open close, don't forget the open close was supposed to help us serve, as buy as a sell continuation, right? But now price has disrespected it and closed above it. So there's every possibility that if this is a 4 hours time frame, right? If this type of engulfing is on a 4 hour time frame and price closes above the open close, one of the things that you are likely going to see is that just mark out this open close on the 4 hours because it's a strong key level from an higher time frame, right? There's every possibility that price might come to the extreme, right? So you can have two places that you want to see price run from, right? But majorly, right, the ones on the higher time frame is always going to be very strong. So you can pay attention to the open close key level after an engulfing on the 4 hours. So if you have 4 hours time frame engulf many a times, and after the engulfing, they break above a particular open close, pay attention to that 4 hour open close that price broke above, right? The next thing you can begin to look for is that you can only look to buy when there's proper logic behind it, which means that I want to see internal range liquidity created close to it. Then want to see price take out that internal range liquidity, right? Then bounce off from that same key level and price continues to move to the upside. But if we do not see this type, like this where price creates an internal range liquidity, take it off, there's every possibility that price might come to the extreme key level here, and then price might continue to move to the upside. So remember what I said, that key levels can actually be used for, we can use key levels for entries. We can also use it for exits, right? They are good points to use for exits for entries and also for exits, right? So let's see. I hope we can hear me, right? Please, can we see my screen? I don't know why my chat is not coming up. Okay, my chat is up. My chat is up. So if we look at what we have here, right? If you come to the 4 hours, right? So you can see they are different. So you can see all the types of key levels that we have here, right? You can see all the key levels that we have here, right? Now, this is the 2 hours time frame, right? So as much as this is the 2 hours time frame, right? You can see all the key levels that is being created. One of the best ways to know the key levels is to use the line chart a lot, right? So you can see we have what we call this. We have the A-shaped key level. This is also an A-shaped key level that is resting here, right? This is also an A-shaped key level that is also resting here, right? You can see all of these. These are A-shaped key levels, right? You can see how price was respecting all of this. So if you remember what I said, right, just some minutes ago, you can see this is an open close key levels created by two consecutive buy candles, right? This one right here, this one. You can see this these are two consecutive sell candles and buy candles, right? The price actually uh, created this open close. So what did you notice that price did, right? We're supposed to use it for buying opportunities, but you can see how we broke below it. And the moment we broke below it, you can see what price did again, right? This major second sell came back to that open close, right? You can see the drop, but look at where price came back to overall, the extreme, right? Price came to the extreme, right? You can see the A-shaped key level that was created. Price came to the extreme and rejected close below, only for price to come to this open close, right? And we continue to drop, right? If you look at where this momentum kicked in again, you will see from here, this is an A-shaped key level that price actually created, right? Confirming that, knowing fully well that we are in a bearish order flow. So you can see where price came back to, right? Um, this one as well, price came here, tap into the same key level that was already tested before, came to test it again. You can see we have all of these sales that are currently happening, right? If you look at, let's move to the 4 hours. Uh, yeah. So if you move to the 4 hours time frame, right? You see that this is first an A-shaped key level that price actually respected. Price traded close to it, tapped into it, started to sell only for price. If we investigate what price did here, this is a 4 hours week, right? Normally I wouldn't draw something like this, but when we investigate what happened here, let's see on a much lower time frame. Let's even see what happened. Where did price go to from there before we had that massive drop that price gave to us, right? So see, let's use 30 minutes. Mm. So you can see on the 4 hours and every other higher time frame, you'll see that where price actually reacted from was a week. But when you come to the 30 minutes time frame, you'll see that it was more like an A-shaped key level, right? So what price actually came to do is they took out this particular liquidity and price just continued to move to the downside. So if you can spot all of these key levels, right? You can spot all of these key levels on the daily, you can spot all of them on the weekly, you can spot all of them on the what are we calling it now? On 4 hours, right? So if you look at this, move to the line chart, you can see this is an A-shaped key level that was actually created, right? You can see why, if you understand what I've been actually talking about, this is what I'm talking about. Now, this candle on AUD USD engulfed, right? You can see how it engulfed here, right? Engulfed this particular one, created an A-shaped key level. It makes a lot of sense contextually because we also swept the previous daily high. We engulfed. After we engulfed, we created an A-shaped key level. Now, the two previous daily candles traded close to it, but they didn't trade close to that same key level. So what are they going to act as? They are going to only act as inducement liquidities, right? So what do we want to see price do? Sweep liquidity and also rebalance and holding balance or sweep liquidity and tap into a key level. So what did you see price did? You see how price tapped into this key level on the daily, and you can see how the entire momentum for today is to the downside. Now you can see where price is actually reacting from, because when you look at this particular and this same candle as well, you can see how this one engulfed this one, right? They started at the same pricing level, but you can see where this one ended. It engulfed this. So look at where price is actually still reacting from again. This is another key level. So remember what I said, that we can use key levels for what? We can use key levels for entries. We can use it for exit. So imagine we took a trade, a sell from this particular key level, knowing that we saw this previous daily high. We engulfed. We use this previous daily high as our these old daily highs as our internal range liquidity, right? So which means that our entry will be from here, normal 10, because it's a daily time frame, right? We can still do 10 to 15 pips stop loss, right? And we are targeting this low, right? We're moving from one key level to the other, one key level to the other, one key level to the other, right? One key level to the other. So I mean, there are multiple examples. Mm, mhm. So you can see we have the open close. You can see how price reacted from the open close, right? This is an engulfed open close that was actually engulfed, right? You can see how price tapped into it, and overall price still came back to this low. The same thing again after the engulfing. You can see what I said. If price doesn't give to you like an inducement liquidity close to this open close that was engulfed, there's every possibility that price will come back to the extreme, right? So you can see this is the extreme here, this extreme V-shaped key level. Do we have an inducement liquidity close to it? Yes. So you can spot the inducement liquidity that price came to take out, right? This is the previous daily low, right? The previous daily low, price tapped into it, and you can see the momentum for 2 days. In fact, one of the easiest ways to build bias on any pair is to just look for two things, right? Two things, right? Just keep it simple, right? Number one, we are just looking for, like, let's just add this one for context sake. Let's say price takes out a previous daily high, right? After price takes out a previous daily high, we want to see price engulf on the daily. The moment price engulfs on the daily, we want to see the next daily candle, right? Serve as internal range liquidity or inducement liquidity, very close to that key level that was actually created. Then the next thing is we are looking to sell from this particular key level point, because we must see that previous daily high swept. Then we must take price down to the next available key level. Now, this thing that I'm showing you now, that where price must engulf, after sweep of the previous daily high, then it engulfs, then the next candle is going to serve as inducement liquidity. You will see it especially on the daily and on the 4 hours. And 70% of the time, it will always hold. It will always hold. I mean, when you see that the 4 hours gives to you something like this, a 4 hour candle, then the next 4 hour candle engulfs and sweeps the previous 4 hour high, engulfs it, then the next 4 hour candle, which is the third candle, is going to serve as inducement liquidity, very close to your key level that was created on the 4 hours. It will tap into it, and at least 70% of the time to 80% of the time, it will deliver a 1 to 3 or 1 to 4 for you, depending on your stop loss placement, right? It's going to dip, or it must, at least 70 to 80% of the time, it will always play out, right? So those are like uh those are the key levels that we want to expose each and every one of us to. So if you look at what price did here as well on the daily, you can see this is a key level that was actually created here. Are you seeing it now? We had a key level created here. You can see these old highs just served as internal range liquidity, right? So you can see what price did. Remember what we spoke about higher time frame bias, right? Price tapped into it, close below. Look at where price tapped, close below it, tapped, and all of that. The moment it tapped into it and closed below, it made a lot of sense for us to continue to look for sales, right? And you can see how we continue to sell, right? And the sales even make sense the following previous day because we took out the previous daily high and we just continue to sell. We sold for 1, 2, 3, 4, 5 days until all of these lows were taken. So look at where price came to bounce up from again, right? You can see price came back to another key level. So you can see we're using key levels as entries, we're using it as exit points, right? Even if you were selling from here, all of these retracements that happened here, you can see these retracements that happened here, they all happened from this particular point, right? They all happened from um, this open close key level that we have here, right? So you can see, so that is like the basic of key levels. If you move to the daily time frame, right? If you move to the daily time frame, what can you see? Right? You can see this, right? We have this higher high, higher low, higher high, right? So it means that if price is definitely going to move from this particular key level here down, it means that we want to see this, we are most likely going to see this previous daily low taken. And after this previous daily low taken, two major areas would have my interest. This open close that got broken, one, and number two, this key level here, the V-shaped key level. So what I want to see for AUD USD is that I want to see AUD USD continue down, react from here, give to me a confirmation on the 4 hours that we are going to the upside, and we'll just continue to move to the nearest key level that price has actually created. So those are like the three major types of key levels, right? We have the A shape, we have the V shape, we have the open close, right? We have the open close, right? So you can see what I said to you, right? So look at this. Anytime you confirm your order flow, you can see this order flow has already been confirmed on the daily, right? We had this higher low, higher high, higher low, higher high. We broke below this particular structure. So what did you notice that price did here? Look at where price came to open close key level. You can see price did not go below that open close key level, right? As much as it's never going to be picture perfect. What did you notice this one did? The next previous daily high traded close, but it didn't trade into this particular key level. So it's going to serve as our internal range liquidity. So what did price do? We swept the previous daily high, tapped into this key level, closed below, and we continue to sell for over 2 days, right? For us to be able to get this reversal again, we have this key level on the daily time frame, right? Price tapped into it, closed above, and for 2 days, we continue to buy, right? And after we continue to buy, look at what price did again. We bought to the point where we took out an old daily high, right? Remember the forms of liquidity when we spoke about types and forms of liquidity. I said that part of the forms of liquidity include um, previous daily highs and previous daily lows, right? After price takes out, it's just like saying if price takes out an Asian high, the next liquidity that price should go to take is an Asian low, right? So you can see we took out this particular high, old high. We moved from this liquidity point, took out this old high. After we took out the old high, you can see how we closed below, and the next day, momentum kicked in, right? And look at the same thing here again, right? So you can see what price did here. We took out this previous daily low. After taking out the previous daily low, we closed above, and momentum kicked in for the next 3 days until all of these highs here got taken, until this major high here got taken, right? So, yeah. Okay. Somebody wants to ask a question. Okay. So we have about 2 minutes more. 2 minutes more. Right. So you can see those are like the major key levels that you would always see price. Uh, you always that those are the major key levels we want to always see price bounce off from, right? So you can see this one as well. This is a V-shaped key level, right? What did you notice that price did? We engulfed. The moment we engulfed, you can see our price came back there, tapped into it, and price went straight to the nearest daily low, right? And all of that. So you can see price is always bouncing from one point of liquidity to another. Another one you can see on the daily is we have this previous daily high service as internal range liquidity. We also have this is a key level here, right? If you move to the line chart, you can see this is a V-shaped key level, right? Can you see this? This is a V-shaped key level because the other flow is to the upside. Higher low, higher high, higher low, higher high. This is a V-shaped key level that was supposed to be respected. Price broke below it with an impulsive move. When you miss this impulsive move, right? Sorry, now, price broke below this particular V-shaped key level that was created, right? You can see with an impulsive move, and I told us that it makes a lot of sense when it is also overlapping with an imbalance, right? And the next thing I said is that the two conditions that the market wants to satisfy in this case is to sweep liquidity, number one, and also to rebalance this old imbalance that is being created here, but at specific pricing level. Can you see how price came to this particular specific price level and we just continued to drop, right? It even made a lot of sense because this is the daily time frame. So the first daily, and this is where patience comes in, right? I mean, it will save us a lot of stress. The first daily high tapped into this particular level, close below it. So what does it mean for us? The next day, we are going to be looking for selling opportunities, right? And you can see how momentum kicked in, right? The next day, right? Even though we continue to buy, but if you took these sales, right, at least 1 to 3, 1 to 4, you are done before we had all of these buys that started to happen, right? Um, so that is that about the basics. That is that about the basics of key levels, right? So we're going to meet later tonight, let's say from 11:30 or 12. We might even meet earlier so we can still continue our series on key levels, right? We have less than a minute left, right? But this recording is going to be shared with each and every one of us just after it is done converting. I mean, I will also send the first one as well we had. So we'll meet later in the night by 11:30 or 12. So you can come with your questions as well. Yes, if the momentum is right, if the key level is right, momentum will kick in, right? So we